Hello and welcome back to another trade breakdown video. We're going to be breaking down the trade I took in the past week actually, just to provide a bit more insight on what sort of technical aspects I used to take this trade, contrasting to the USD CHF trade I took a few weeks ago, which I broke down, which was this trade right here. You can go and watch that video on my channel. We actually shorted based off of the US economy standpoint to go short on the dollar, which is why this trade breakdown is actually quite interesting due to the fact that we were actually longing the DXY. So what I'm going to do is I'm going to show you the trade on the EUR USD, which is what the pair I took it on, and then we're going to break down on the dollar index step by step, sort of my ideas for taking the trade. You know, this has got all the lipstick on it, you know, the analysis tools that I've used to take the trade and why I did what I did. However, I think it's good if we go through it on the DXY together, just so it gives a bit of sort of standpoint of why I did what I did, what I was seeing in price as it was forming, and how it come about, the trading idea actually. So I thought that would be useful. So this trade actually was 3.8R, which is a very nice swing trade for me. You know, we weren't in there for too long. It actually included a stretched take profit due to things running my way. A very, very nice entry point, which was just an optimal trade entry that actually led to another winner. So if we break this down on the dollar index. So firstly, let's start the analysis on the higher time frame. Let's go on the monthly chart. So we've been trading we've been trading heavily bearish throughout the year. And whenever this happens, you know, sort of foreign exchange currencies always sort of find a point of equilibrium where they want to retrace back up. You know, it's never, if we zoom out a bit on the monthly chart here, we don't just have straight runs higher and then it never comes back. We always sort of see, again, even this, a huge sell-off. We come back to equilibrium of this range. We go higher. We come back to equilibrium of this range. And this sort of happens all the time. So it's never... you should never just expect a one-way trending market for forever. You should always sort of look and reevaluate your bias and what sort of confluences that are going your way or against you, because with foreign exchange, you know, you are always valuing one currency against another. So countries will always try to be as competitive as possible during these times, always analysing things where they want either things to be at a lower valuation or a stronger valuation. So zooming in a bit more to give a bit more insight into this trade. This previous month's low sweep happened. I'll mark that out, previous month's low, and then we rejected heavily off of this area. So we failed actually to close through this, which, as ICT always points out, you know, wicks do the damage, bodies tell the story. And this body come down, swept this sell side liquidity and closed much higher in the range. So breaking this down to a weekly, we're going to go through everything. We've had sort of consolidative price action. We swept some sell-side liquidity, which heavily looks like accumulation, manipulation, and then I'm expecting and anticipating this side to be distribution. So looking at this through a magnifying glass, you know, we've come down, we've swept this previous month's low, and then heavily rejected higher. So dropping down into a daily chart, this gives us some really nice sort of microscopic analysis within this area. So we swept this sell side liquidity as pointed out, and then we heavily displaced higher. So my first insight would be looking to this high right here. This would be what I would signal as a market structure shift to the bullish upside. If we mark out this initial consolidation right here, you know, this is price action where we have just been chopping around. We're not doing much. We're accumulating orders within the market, and then we have come down. We've hit this bearish fair value gap to use to trade to this area, swept this previous month's low actually I've marked out. Let me just change that. Just habit that is. Previous month's low, swept that, and then heavily rejected as soon as we've taken this liquidity and displaced higher, leaving a fair value gap. However, due to the fact that we didn't actually create a market structure shift at this point, I wanted to let the first leg of distribution go, which would be this. So this would be our bullish fair value gap. Just mark this out here. So this is our bullish fair value gap right here, where we are looking and just monitoring price at this point in time. We don't want to make too many decisions based off this. Yes, it did reject. It could reject. However, when the model presents itself, you want to make sure that the confluences are going your way. And this did include a market structure shift. So after we tagged this fair value gap, again, we had a leg of distribution higher, which left, again, a fair value gap, an order block, and a mitigation block. So within this area of price, we're heavily anticipating rejection from this area due to the fact that it's got a load of PD arrays within this area. So as we retrace into this area, there is nothing more to do with the trading analysis. We have already swept previous month's low. We've already displaced higher. We've retraced back, tagged a fair value gap, and then used this fair value gap to send price higher again, creating very strong bullish sentiment that we're going to come back up to this area of accumulation. So my form of entry is going to simply be an optimal trade entry from high to low to mark out this new range. Now, as we have already tagged this fair value gap right here, I don't expect, if we are going to continue bullish, for this area to go. So the question I would ask myself is, where is a good place to put my stop loss? And this is exactly the area I would put my stop loss, because I don't expect price to go there. As I've just said, we are expecting bullish prices. So that's the first part of the trade sorted out. Now, as we have been chopping around and as we have had government shutdowns, I don't expect price to move with such speed that we're going to tap 50% of the range and shoot off again. And also, I want a risk to reward that makes sense to me. So there's no point entering here because this is a one-to-one and it doesn't make much sense just for my personal trading statistics that I've done, back testing, ensuring that I've got an edge in the market. I always find it better when I enter deeper. And as you can see, I've marked out this red line here, the 75%. I saw that we were chopping around this area, very wicky sort of daily candles, and you just never know which previous day's low sweep is going to come. And one of the big things is with trading, you can't control what price is going to do. However, you can control your entry point. So if you want to wait for a good entry point, then you can totally control that. This is what trading's about, controlling the variables we can control in order to let a statistical edge play out within the market. So this is where I actually decided to enter. Now, if you do see, we did actually displace heavily, leaving this volume imbalance. Again, just displacing in price, gapping higher, and that's when I thought, right, okay, I could have a bit of a runner here, especially with this accumulation not being tagged. So I did actually, if we look on the EUR USD, stretch it a little bit. That was the 0, and I did it stretch it to this range. As soon as we swept this low right here that's marked out, I decided to close due to the fact that we could totally hold this trade further. However, you've always got to ask yourself, what are you comfortable with holding? What's good for account and your position that you're in, and what makes sense for you at that time. It's never a thing where someone can tell you just hold this. Everyone will be different. Everyone will be in different situations where you need to get out or you need to get into a trade. So I just wanted to manage this effectively. I always ask myself the question, if it come back from this point now, being 3.8 R up, would I be happy if I got 1 R out of this trade, or if I got break even out of this trade? And the answer to this particular question within this trade was no. I wanted to take at this point because I've already exercised an edge in the market. I've got what I wanted. I know from data collection that it's likely that we're going to see some retracement within this area, and I just didn't want to sit through the extra time and retracement within this area. So I decided to close the trade. So pretty much it's an ICT 2022 model on a swing trade. We've had a run on sell side liquidity, displacement. We've left a fair value gap. I've let that go, and then I've hit the silver bullet, which is actually just the second leg of distribution within this area. It's really, really nice, this model, because once you have had all of this, the confirmation from the first PD array marked out, you then have got nothing more to think about. Always hit this trade. I know this is a model that works. I know it's statistically, for me, this is, again, based off of my findings. Please can't stress enough, if you guys want to go and use this, please do your own research, your own back testing, your own data collection, as that's the only time you will perform within the markets in a confident way, knowing what you are looking at. So this is why I took this trade, and I've got nothing more to think about once we get back into this area. With the trading idea now, if I was to give a little bit more insight of what potentially could happen, we have taken this accumulation. However, again, if you looked at this chart now, there is nothing to say that a reversal's coming yet. So I'd actually just mark out, for now, this high to low, and just look to get optimal trade entry over this point, because again, the stop loss here, hasn't been, we've come up to this fair value gap, we've tagged that, we've displaced lower again, leaving fair value gaps, leaving an order block, mitigation block. This is a nice area in price to retrade to. So if that does come and there's not any new developing factors in terms of the fundamentals, then I'll definitely look to get into that position. But again, it's not financial advice. Always do your own sort of due diligence on what you are looking at within the markets. So all in all, guys, that is today's trading breakdown video. I do a weekly forecasting series where I break down my weekly analysis to give a bit of a better insight onto what's happening within the markets. So if you want to watch that to keep up to date, I usually do a 10 to 15 minute video every week just to give my view. It's pretty interesting. I break down some more fundamental stuff as well. So definitely check that playlist out and get caught up with that. I also do have a trade breakdown video for the USD CHF trade that I took a few weeks ago, which was actually 5.5R. So with that being said, guys, thank you very much for watching today's video. If you did enjoy, find it useful, or there's something that maybe you've spotted, please leave in the comments, subscribe to the channel. And other than that, guys, have a safe week's trading.